right now. And so, welcome to our first interview program. If you are among those that are financially impacted by the coronavirus pandemic, you might be concerned about how to pay your mortgage, and you might even be concerned how to pay your rent. Federal and state governments have announced plans to help struggling homeowners during this time. So we are here today to get information on what to do now, what your options are for the mortgage, and even rental relief. My name is Teresa Miller. I specialize in residential real estate, and I have been working for the past 20 years selling real estate. Can you imagine? I don't look a day over 20, right? That's right. I
So
work
funny.
with clients who are going through life-changing events, whether they're looking to upgrade, downgrade, relocate. I work with a lot of people that are doing trust sales and probate. And it's during this time I had the awesome privilege to meet the amazing Joe Soto. Joe is the most renowned lender. He is the most honest lender. He can help you in any type of situation. So I am just totally honored to have him be a part of our team, a part of our group, and he's going to help demystify all those rumors that we're hearing. So, Joe, I'm going to turn it over to you. I want you to introduce yourself, share a
Yeah,
little bit about yourself, and then we're going to dig deep into our situation.
cool. I'm Joe Soto, husband, father, all around good guy who happens to do loans. So I work for Cross Country Mortgage, been in the mortgage business since '03. So this is my second go around at housing chaos. I'm really, I'm really getting pretty good at this. No, I'm just kidding. But yeah, I've been in the mortgage business since '03. Two wonderful daughters, beautiful wife, and just want to try to help as many people as we can through this crazy time. So excited to do something like this with Teresa. I don't have a fancy background. I just have my kid's desk behind me. So don't judge my lack of fancy background. This is real Zoom video talk that we're going to get today. So
Joe,
there
I
you go.
love you. I love you. I love you. So, for a lot of homeowners, there's help, but they need to understand the situation. The first thing I'm sure you will agree with me is that for anyone that can pay their mortgage, they need to pay their mortgage, right?
Yes, for
Mhm.
sure, 100%.
Don't call the mortgage service if not facing an immediate issue because I'm sure they're getting a lot of calls. But if they can't pay their mortgage or they can only pay a portion of it, they should contact their mortgage server immediately.
Correct.
So
Yep.
let's talk about the new federal law, the Coronavirus Aid, Relief, and Economic Security. That's a lot. The
That's a
acronym is
lot.
the CARES Act. And they put into place two protections for homeowners with federally backed mortgages. I'm going to tell you what those two are, and then Joe is going to explain it. The
Yep.
first one is a foreclosure moratorium. The second one is a right to forbearance for homeowners who are experiencing a financial hardship due to the COVID-19 emergency. So now let's take it from the top, Joe. What is a federally backed mortgage? What is that?
So I'm gonna backtrack a little bit more, and
Okay.
I like to tell stories. You know that
I like stories.
I'm a big storyteller, and so I recently had a client who called the mortgage company to ask them what the forbearance program was because they
Right.
literally did not know.
Right.
Like, I just want to get information. Called and got information. Um, didn't go into any program. He's like, cool, thanks for the information. That was it. Got a letter a week later saying, hey, congratulations, or just notifying him that he was put into forbearance,
Mm-hmm.
that he did not authorize, did not want to be put into
Ooh.
forbearance. But just because he called, he got put into this program.
Ooh.
So you got to be really careful even when you inquire, because this is uncharted territories that
That's
we're
true.
getting into, and he was, obviously not in that situation and shows up on his credit report as forbearance and not a happy camper.
Wow.
Yeah, all from just inquiring, saying what are the good and the bad of this program. So you got to watch out. But federally backed mortgage loans
Mm-hmm.
are basically anything that's backed by the federal government, which is almost every loan that's out there, right? FHA, VA, Fannie Mae, Freddie Mac.
Ah,
Those are the major ones. Conventional FHA, VA are federally backed loans, basically.
okay. Federally backed loans. So if you don't have a federally backed loan,
hmm
are there still options? Are there still relief options? Something that you can do?
I think it would depend on the servicer.
Nice.
So the servicer is the one that's going to decide on what they will or will not do.
Mm-hmm.
And some of those examples, like of non-federally backed loans, might be non-qualified mortgages, hard money loans, things like that. That independent servicers hold that money, and they might say yay or nay. With
Oh.
the current program, there's no proof of forbearance. Like
Mm-hmm.
in when the market crashed the first time, right?
Mm-hmm.
You couldn't make the mortgage payment, and you had to submit a package of paperwork to
Right, right.
say, hey, here's why I can't make my mortgage payment. But with this CARES Act, you don't have to submit any paperwork.
Hmm.
You can literally call and say, I'm impacted by COVID-19. I can't pay my mortgage. And they go, okay. And they put you on a forbearance plan. No
Wow.
proof. You could have $1 million in the bank. Doesn't matter. They'll go, okay, fine. But
Interesting.
yeah, but the problem is that people aren't, two problems. One, the person putting you in the forbearance plan, the person who answers your call, they
Mm-hmm.
don't they don't know what they're giving you. And
Ah.
two, the client who's taking it is they're just saying yes because they need a break on the mortgage, or they think it's free money, which isn't the case.
Hmm. So let me see if I understand this. Forbearance is when your mortgage service, let's say Wells
We
Fargo
don't like to
allows
name names. We don't. Bank of Joe.
so the Bank of Joe, so the Bank of Joe allows me to pause or reduce my mortgage payments for a limited period of time. Now, does forbearance erase what I owe? Do I still have to pay those missed payments in the future? How does that happen?
Banks will never, ever, ever not get paid. That's why they have the biggest buildings on the block, right? So forbearance doesn't equal forgiveness.
Mm.
That's the big misconception out there. So forbearance basically means you're delaying the payments. Doesn't mean that they don't have to be paid. So I've seen lots of versions of these forbearance agreements over the years.
Mm-hmm.
What we're seeing right now is they're giving you the bank, you call up, the bank gives you 3 months with no payment. So
Mm-hmm.
let's say April, May, and June. But then in July, guess how many payments are due, Teresa?
Well, let's see. I couldn't pay it in April. I couldn't pay it in May. I couldn't pay it in June. So don't I get to just start with July?
Oh, that'd be nice. If it was Bank of Joe, yes, that would be the case.
Mm,
But Bank
mm.
whatever says no. In most cases, 4 months are due.
Whoa.
So you skip April, May, June, July, August, you owe 4 months. So if your mortgage payment is 3 grand,
Oh,
3, 6, 9, 12. I mean,
oh my God.
you're going to owe a chunk of money at that point.
That's
Um,
a lot. That's
and
a lot.
and a lot of people are asking, what happens if I can't pay?
Yeah,
Right?
you
Like,
read my mind. I was just going to ask that question.
what happens if I can't pay the mortgage at that point?
Yeah.
Then you have to apply the way it is right now. You have to apply to get a different type of forbearance or an extension. Um,
Oh, how many extensions can I have?
we don't know because we haven't gotten there yet. But check back in 4 months, and we will tell you what they come up with for this, right?
Oh,
Because
that's going to be major.
it's going to be major. It's going to be huge because we don't know. It's uncharted territory, right? Like it was literally a magic wand that said, "Poof,
Hmm.
forbearance if you need it." The challenge is people are taking advantage of it. Uh,
Yeah, true.
some cases, and a lot of people really do need it, but I think you have to know what you're getting into and what's going to be required of you after the 3 months. How much is going to be due and what are your options at that point? Because we don't know when this is going
Interesting.
to end.
That's interesting because if they can't pay in April, May, or June and they lost their job as a result of the COVID-19, they're going to be in a lot of trouble. They're going to
They're
be in severe strain.
they're already 90 days late, right?
Hmm.
Technically,
Hmm.
because they haven't paid in 3 months, and at
Hmm.
120 days, I think you can start foreclosure.
That's my next thing that's on my list here. I'm just getting ready to talk about that.
Yeah.
See, Joe, that's why we're in sync. We're in sync. So foreclosure is when the lender takes back the property
Yes.
after the homeowner fails to make required payments on a mortgage. And foreclosure processes differs by state to state. So walk me through just what happens, the timeline for the foreclosure. You just mentioned 90 days. So what does that mean? I haven't paid the mortgage for 3 months. And now what? In the
Well,
old way, before the CARES Act.
yeah, I was going to say, because the CARES Act actually put a stay on foreclosures.
Yes, and we're going to talk about that. So tell them what it was like before.
So before, once you're delinquent, then the bank issues a notice of default. And the notice of default basically says that you're in danger of losing the house, that the bank's going to take possession, usually after 120 days.
Mhm.
And then you have an opportunity to get it caught up and keep it from going into foreclosure
Mhm.
and losing the property.
Mhm.
Um, but it really is a matter of you working with the bank to get it out of foreclosure or catching up on those payments. Most of the time, that's what it's going to take, right? If you're 120 days delinquent, catching it up on those 120 days, and then the legal process of losing the house and figuring out what that looks like. So,
Mm.
God willing, people don't get to that point, that people get back to
Exactly.
working and you can get caught up on the mortgages and stuff like that. But that's the biggest fear, is if you're 120 days, 90, 120 days late,
Mhm.
you know, even if you're, think about it this way, if you're behind, if your mortgage payment is 3 grand a month and
Mhm.
you're behind 4 months, that's $12,000.
Correct.
Even if they break that out over a year, if they say, hey, Teresa, we're going to give you a year to pay us back the $12,000,
Okay.
now you're paying an extra $1,000 a month.
Oh, in
And now,
addition to my regular mortgage.
in addition to your $3,000 mortgage, that was already tight.
Okay, I see now. I see now.
So,
So
I
that could
mean,
be hard.
yeah, it is. But you know what? It's one of those things, like when the market crashed, '07, where you do what you have to do and you do what you think is right, because it's, at least you have time. But I don't think the banks are explaining the worst case
Exactly.
scenario, right? Like, I'm a worst case scenario kind of guy.
Exactly.
Don't tell me the best. Don't tell me
Exactly.
3 months of no payment. Tell me, like,
What's
month
going to happen?
4. Yeah, what can happen?
And that makes sense. That's why I really wanted to do this, because like I said in the beginning, there are a lot of people that just don't know. So now that after they pass the CARES Act, what does the foreclosure procedure look like now? What are their options today?
I think that's still fluid. I think that's something that we're going to see because of the number of people that are going to go into forbearance,
Okay.
that we don't know what that's going to look like in 90 or 120 days, right? What's the default number going to look like?
Mm-hmm.
So, I don't know. Will they do an extension? I don't know. I think it's going to be case by case. I think
Exactly.
it's going to be one of those things where people are going to have to go back to the traditional ways, if they need more time, of proving that they were impacted by,
Exactly.
if you worked in entertainment, if you owned a business, there's lots of industries and you can go on and on, but my guess is after the forbearance period, you would have to show proof of the forbearance,
Mhm. And
how
that
you were
makes
affected.
sense. I think the key is to communicate. I was talking to a lady that I call in my farm area, which are people that I call all the time. And I just wanted to say, how you doing? What's going on? And asked her, does she need anything? She tells me, well, I haven't been able to get to the bank because my money comes however it came, Social Security or however she got it. She needed to get to the bank to get the money in there so she could pay the mortgage. And it was, when I called her, it was April the 15th. She hadn't paid the mortgage. And she says, well, Teresa, they told me to hold on to my money, not to pay it. And I said, oh my goodness. Did you call them? Have you talked to them? Have you communicated with them? No. Do you think I should do that? Yes. Hang up the phone with me and call immediately so that they can have that conversation.
Hmm. Yeah, you got to get as much info as possible.
That makes sense. So now let's talk about some of the options. We talked about the forbearance, we talked about some of those things. First of all, how do a person figure out who their mortgage lender is? How do they know what type of loan they have, whether they have an FHA, whether they have a conventional? Where do they find that information?
Um, Usually on their mortgage statement. So usually their mortgage statement will tell them who the servicer is. So the servicer is who you're making your payments to. And
Okay.
then a lot of times on the statement, it'll say conventional fixed rate, FHA. It
Oh,
should say it right there. In most cases, it tells you what it is.
okay. Okay. So if they decide I don't want to do a forbearance because I know now I spoke with Joe and Joe told me that in 4 months I may have to pay all that money back. I don't want to do that. I definitely don't want to go into foreclosure. What other options? Can I refi?
You can, as long as you're not in a forbearance agreement, right? Because if
Ah,
you're currently in a forbearance, then Fannie Mae and Freddie Mac will not let you refinance as of today, as of April 21st at 5:22 p.m. Um, but you can refinance the mortgage, right? Assuming that you can, um, you qualify and meet the regular guidelines, right? That's one of the challenges is if your job's been impacted or your income's been impacted by this coronavirus and your pay is down,
mm-hmm.
then that's going to affect your ability to qualify for a new loan, right? Like
Mm, that's
let's say if
true.
your salary is 50 grand a year and you make 50 grand a year in bonuses or commissions, but now you're getting zero, that's going to hurt you,
Hmm.
right? Or if you own a business that is typically, customer service type of business,
Okay.
and you can't be open, that's going to affect you being able to qualify. So,
Hmm.
but there's lots of opportunities. Interest rates are great. People are capitalizing on it to, one, just get a lower mortgage payment.
Oh.
Two, cash out. I've had a lot of people trying to take money out of their homes to do home improvements and stuff because they're home. So they're like, I'm going to do that project, right?
I
Yeah.
was just going to ask you about that. Is it a good time to pull out some money now if you can? And are the qualifications the same?
Um, the qualifications are the same, right? It is a good time to try to pull your money. I mean, if you're looking to do work on the property, or if maybe you just want to pull the cash out. Like I had a client I talked to recently who has a home equity loan on his house
Mm-hmm.
and had about $50,000 available credit.
Mm-hmm.
And he's like, should I pull it out? Like, do I need? I said, I don't know, but there's a chance they could freeze it and you won't have access to that money later. Um, you,
Oh,
and so it's one of those things. Do you want to have the cash or do you want the bank to have the cash?
that's true. That's true.
Right. So I don't know. I'm not I'm not good at predicting the future, but I'd rather have the money in my own bank account than at Bank of Joe.
That's true. You're just reading my mind because as a real estate broker, I get asked this question all the time. When is it a good time to buy? When it is a good time to sell? Is it a buyer's market? Is it a seller's market? What's going on with the market?
I think there's lots of opportunity. It's obviously there's less buyers, right? There's less activity. I don't know if there's less buyers. I think there's less activity,
Mm-hmm.
but interest rates are still really low, right? So normally when interest rates are low, there's a lot of activity and lots of offers, and then you wind up having to bump up prices. And
Mm-hmm.
so sometimes it contradicts, right? But right now, if you're out in the market, maybe you're not running into those multiple offer situations. Um, and so it's a good time. It's a good time to be a buyer because interest rates are low. Also kind of still a good time to be a seller because there's less competition, right? There's not as many homes on the market.
True.
So it's still
True.
an inventory thing, at least, here in Southern California. So I feel it's still a really good time to do something. Again, assuming you're going to be in a house the
Exactly.
next 3 to 5 years, right? If you're like, Joe, I'm going to move in a year,
Mm-hmm.
probably tell you don't buy anything, right? Like just sit
Okay.
around and wait. But again, if you're thinking of long-term wealth and long-term
Mm-hmm.
investments, I've been getting a lot of people who tell me they want to time the market,
Mm-hmm.
and there's no timing the market, right? You look back at
Exactly.
you look back at a month ago when the stock market was crashing, right? Crash, implode. It was terrible. Everybody's like, I'm pulling my money out of the stock market.
Mm-hmm.
And they did. And then what happened in the week after that?
It went up.
Way up. And all those
Mm-hmm.
people were sitting on the sidelines going, oh man, I went
Wait.
cash. Because you just can't time it, right? You just got to ride it out. Any good financial planner will tell you you're going to ride it out. It's your time in the market, not timing the market, right? I mean, it's old analogy, but that's
Exactly.
the most recent example I tell people. I'm like, look, if you had X dollars in the stock market and you got scared and pulled it out, how much money did you lose?
Exactly.
Because if they would have stayed, they would have made money back.
Exactly. That's what my husband tell me all the time. He said, you can't watch the market. You can't lose taking profit, but you can't watch it every day.
No.
And that makes me nervous. So
Although I think he watches it every day, man. I know him. I'm pretty sure.
I can't
I
look
don't think
at it.
Mr. Miller is on this video. I'm pretty sure he is checking every day
Oh,
and
he
looking, going,
checks. He checks. So for those people that are looking to buy, let's say in the past 30 days, with everything that's up and down, and if anyone would know, you would know how many loans, new home purchases closed in the past 30 days, would you say?
oh, geez. In Orange County, LA, nationwide?
Or just even with you, with your company?
Oh, a lot. I don't know the exact number. I mean, we're busy. We're still closing loans really quick. We haven't seen a slowdown. Like,
Wow.
great. Thank goodness it's been very busy.
Outstanding.
Um, so homes are still selling, right? People are still buying. People realize there's still a lot of opportunity to do
You mean
something.
they're not just sitting there not doing anything? Hmm.
Not no, I mean, because you need a house to live, right? You need food and shelter.
Yes, yes,
That's
yes,
never going to go away.
exactly.
So regardless of what happens, I mean, this is a good example, right? You're stuck to be home. Better to
Exactly.
be in your own house than in your landlord's place.
Exactly.
So,
Exactly. I had a client, matter of fact, I had two clients earlier this year. Both clients, one I helped them obtain a rental, the other one I helped them rent their duplex. Both of them, the rent is either 2,400 or $3,000 a month.
mhm.
What can they buy for $3,000 a month as far as property or a house or a mortgage? Just a rough guess.
Um, 450, something like that.
Wow. They could be in their very own house. That's amazing.
Mhm.
And they're renting. And if they did that rent for $3,000 a month times 12 months versus buying, what would it look like for them as far as equity, value, gain, loss, something to that effect? The numbers. You like numbers. Give me some
I
numbers.
do. I do. It's my love language.
Give me some numbers.
My wife is so lucky. My love language is numbers. Gosh, she scored. She scored when she got this guy.
That's
Um,
right.
I mean, if you just looked at the beauty of it is based on, let's say 500,000. Based on 500,000,
Hmm.
the the equity increase is based off of the total value, right? So $500,000 place, if it goes up 3% a year, that's 15 grand a year
Wow.
that you're making in equity, right? Assuming slow market, right? Even if you said 2% a year, that's 10
That's a
grand
lot.
in 1 year. That's almost $1,000 a month of equity that you've built. Um, and then I always tell people that, paying your mortgage is like a forced savings, right? Because you're
Exactly.
paying a mortgage, but you're paying down your own principal that when you sell the house, it's your money. And
Exactly.
and that's the piece um, that I love, because you're building your own wealth versus somebody else's. And
Exactly.
it's just a matter of doing it for your family and for future generations, and just making those sacrifices. It's not easy. If it was easy, everybody would do it, but
Hmm.
you make the sacrifices because you realize the wealth and the money and the pride of ownership that you have. It's pretty cool.
Exactly, exactly. So if someone is looking to buy today, what do they need? And they want to talk to Joe, they want to get pre-approved. What do they need to do?
They need to call 866 Joe Soto, and that would get them started. No, I mean, yes, they can make a phone call, right? You can call 866 Joe Soto. That is a true statement. Um, but you can just give me a call. Me and my team will take care of you. We'll walk you through the process, right? We break it down into a 3-step process, and we help you understand the monthly payment and the down payment, right? Those are the two biggest pieces of the puzzle. So we'll walk you through all of that stuff. Just start with the phone call and
Yeah.
come up with a plan, right? Whatever that plan is, whether it takes a month, 6 months, 2 years, 3 years, 4 years, whatever it is, everybody's plan is different. You just have to start somewhere.
So one of the questions that our viewer has, she says if they can afford the 3,000 a month in a home, don't they have to have better credit in order to buy? So they have the money, but their credit may not be up to par. What can we do for people like that?
Um, Credit is just something you have to work on, right? So we can go down to a 600 credit score.
Really?
Um, mhm.
Did
So
not know that.
we can on an FHA loan, but credit is my second love language because
Mhm.
I love looking at credit.
Yeah.
And I think when your credit is low, it's just because you need to address it, right? You need to figure out what the issues are and how to make it better. The problem is that most people don't take time to teach somebody about the credit, or they get scared, right? Your credit's low, so you're like, I'm just going to put that over there, right? And I don't want to look at it, and then I'll
Mm-hmm.
get to that whenever. But the truth is, if you want to buy a house, you
Mm-hmm.
have to sit down with the Joe, and he's got to go through the credit with you and say, look, here's the things you need to do. And it might take, like I said, a month, 6 months, a year, but if we can get you above 600, we can get you in.
Okay, cool. And what about the buyers that say, I want to talk to you, but I don't want you to pull my credit because it's going to affect my score. It's going to drop my score. Is that true or is that a myth?
Did I tell you this story? Did you set this up, this question?
Did not.
I didn't tell you the 47 credit inquiry guy.
Oh my God. No, please share.
So I did run a guy's credit, 47 credit inquiries in the last 120 days,
Oh my God.
still had a 780 credit score.
No
And I was like,
way.
yeah, and I was blown away. I was like, wow.
Hmm.
Couldn't believe it. 120 inquiries. I mean, it was, and I go, what happened? And he put his information on a website,
Mm-hmm.
and it just went bonkers with
Oh my
credit inquiries.
God.
Yeah. So the two things you'll learn from that: one, don't put your social security number on any websites. That's first Joe Soto tip of the day. Second is that the credit inquiries themselves shouldn't impact your credit,
Okay.
right? Because if Joe runs your credit and it's 700 and then Teresa runs it the next day, the bureaus know that you're shopping for a mortgage, right? Or you're shopping for a car. Same thing if you went to Toyota and Honda and Ford. The bureaus know you're shopping for a mortgage. What can impact you is derogatory items. So Joe runs your credit in April,
Mm-hmm.
and you have collections and late payments and judgments. And then Teresa
Oh.
runs your credit in May. Well, guess what happened in May? Those collections and late payments and judgments reported in May.
Mm-hmm.
Odds are Teresa's going to pull a lower credit score than Joe. So it's not necessarily the
Oh.
inquiry that gets you,
Mm-hmm.
it's the negative items reporting again.
Is when they show up.
Because
Okay.
they showed up again. Because now May more derogatories. That's why that guy with the ton of inquiries.
Mm-hmm.
That's why his credit didn't drop, because he didn't have any derogatory items.
Got
Everything was
it.
picture perfect.
Got it. Got it.
Yup.
Okay. Interesting. Interesting. I had another question, but it slipped my brain. Oh, that's so not good. And I'm sure it had something to do with oh, here's my next question. When I refer a person to you, a couple, they want to buy a home and their credit is good, they have a few dollars, everything is good. How long can you underwrite them, secure the loan, and close escrow?
Um, I mean, we do it fast. We've done it in as little as 10 days. We just got a VA closed in 15 days.
Oh my God.
We can close escrow quick.
What
Um,
makes you different from everybody else? I've heard rumors 35 days, 45 days, 60 days. What is it that you do?
um, I've got a great team, honestly. Everybody on my team, Kelly, Alicia, Melody, everybody on my ops team, like they're really, really good. And we are very proactive.
Yes.
So we ask the client for a lot of stuff up front. I mean, we dig and poke and prod and ask up front. That way, when you get into escrow, there's very little surprises, very things that we need because
Mhm.
we really try to do a lot of work up front. That way you can move quick and make your offer stronger in the eyes of the seller. You know what I mean?
That's true.
Yeah.
I have sellers, when I'm representing the buyer, they want to know, can we waive loan contingency? And most of the time, I'm hesitant unless I'm working with you. I feel very confident that when I work with you, you have already taken my clients through the ringer. And when
Hmm.
you give me their letter of approval, they are approved. Like you said, I won't get surprised. What can we tell people that want to do something like that that's not working with you? What should they make sure that's done before they say, yes, we can waive loan contingency?
Um, the biggest deal killers is income.
Okay.
Is being able to verify your income, especially if you are self-employed, right? Making sure that the lender looks at your tax returns for 2 years. If you own multiple businesses, disclosing all of those businesses, everything out there, even if you think it's just a small partnership, it matters. Um, and then big time for people who get overtime, bonuses, commissions.
Mm,
Those are the biggest deal killers. You have to make sure that the lender does their homework on all of that stuff
okay.
because that's the stuff that'll surprise you. And all of a sudden, most of the deals I get that are rescue deals, it's because of that.
Hmm. What about buyers that want to buy a second property and they want to use the first property as income? How does that work? Can they do that?
So they own a home already.
Yes.
They want to buy another home.
Yes. In
They
the
can
first home, they want to rent it out.
they can do that with the conventional loan, and use the rent on that departing residence. So if the mortgage on that first home is $3,000 a month and it rents for, let's say, $3,000 a month, they can use 75% of that 3,000.
Hmm.
So that'll help offset that, but typically it's only done on conventional loans.
Hmm.
FHA loans require that the second property be 100 miles from the first property. That makes it a little tough.
Oh, wow. Like a different state. Could be maybe.
Or I think I just looked at one and it was Oxnard to Riverside or something like that. Like
Okay.
that far apart, it
Hmm.
gets tough. Most of the time, 99% of the time, it's a conventional. Conventional, there's no limitations, right? You could own a home in Lakewood and buy one in Downey. You can own a home in Huntington Beach and buy one in Anaheim and use the rent.
Okay. And does it make a difference because it's a conventional versus if they did a VA loan and an FHA loan? They've got two federally backed loans. Does it make it a difference with the property appraises or anything like that on the one that they're renting?
On the one that they're renting,
Qualify for income on the one that they're purchasing?
yes. Well, on FHA, FHA doesn't really like people to do that. So their
Mhm.
guidelines are really strict. You have to have certain percent of equity in the departing residence,
Oh,
right? So they don't really care. VA is a little bit more lenient on it because lots of servicemen and women get deployed, right? All
Okay.
of a sudden you're working at Camp Pendleton and you get orders to go to Idaho.
True.
That house is going to become a rental, right? So VA is a little bit more relaxed on that,
Okay.
but it's, and conventional is more relaxed. FHA is a little harder to do, but that's why we get together and look at all the options,
Oh my
right?
God. This sounds a lot. That's why I always tell people I am the house person. Joe is the money person. He doesn't mess with my houses and I don't mess with his money.
I know nothing about contracts or properties or bedrooms or bathrooms at all. I just told somebody that today. I was like, so where do you think I could live, Joe? I'm like, don't know.
Talk to your realtor.
Yeah, I was like, I have no idea.
I
Yeah.
know that when we're writing our contracts and the sellers need seller or the buyers need credit, when I'm writing an offer, let's say I wrote an offer at 450 and I would take it up to 460 to allow for that buyer to receive $10,000 in seller credit. Is there a limit as to how much credit a buyer can receive from the seller, from you as a lender, from the man down the street who wanted to give him a gift? How does that work?
Gifts are okay. So as far as credits from the seller, they can't exceed the closing costs,
Oh,
right? So the seller can't give you money for your down payment. That's the easiest way to describe it. So if
mhm.
your closing costs are, let's say, 2% of your purchase price, typically the seller credit isn't going to be more than 2%. So
Okay.
even if you got a $10,000 credit,
Hmm.
and then let's say you do a home inspection and now the home needs a new AC, and now they want to give you $3,000. How much does an AC cost? Do you have any idea? I have no idea.
Well, it depends. If the ducts are already in place, you can get the actual unit for about 4,500 to 5,000.
Perfect.
But if they're
So if
not
you're
in
getting
place, you have
five
to go
grand,
for. Hmm.
so you already got 10,000 from the seller, and now they're going to give you $5,000 credit for the AC. That's
Hmm.
15 grand. Your closing costs aren't 15 grand.
Oh,
So closing cost credit, seller credit shouldn't exceed closing cost. 102%, you're going to be fine.
okay, that's not too bad. Another thing that I know exists is PMI. Why do we have our MIP? They changed their name, but whichever one. Why do we have to have that, and why is it important?
Because it protects the banks, and that's banks won't lend unless they're protected, but it's required anytime you don't put 20% down on a property.
Mm,
So MIP is, or PMI. PMI is a private mortgage insurance that's paid monthly.
hmm.
MIP is mortgage insurance premium that's paid upfront, usually a one-time fee.
Hmm.
And there's two different fees. One, FHA charges the MIP upfront. PMI is on conventional or FHA loans. So usually a monthly fee when you don't have 20% equity on the house.
Hmm.
And usually you'll have that on an FHA loan, you have it for the life of the loan. On a conventional loan, you can get it off once you have 22% equity in the property.
Oh man, you were reading my mind. That's exactly what I was going to ask next. How do you get rid of it?
That's the key. FHA, you got to refinance it. It's the only way to get rid of your PMI unless you've had that FHA loan. I think it was prior to 2009. Can't imagine there's people out there who still have that, but
I know.
I think that's the guideline. And conventional, you'd have to get an appraisal done on the property. So if you just paid principal,
Hmm.
then it could come off automatically, just on principal reduction, but that would take longer than if you got an appraisal to show that your value's gone up.
Okay, okay. And what about down payment assistance programs? I get that question asked a lot. Teresa, are there any programs? What can I do? Especially now with COVID-19. Where do you see those programs and what's been your experience in the last couple of months?
Um, right now, they've gotten really challenging to
Okay,
do, um, because the banks are just getting more, they want you to have more skin in the game,
okay.
right? Like that's just it. So you're seeing a lot of investors kind of pull back or change the guidelines on a lot of these programs, um, just because we don't know, again, with unemployment being so high, we don't know what that's going to look like, right? And if history repeats itself, if
Hmm.
you remember back in the day, The people who foreclosed first were the 80/20s,
That's true.
right? So right now, today, they're a little bit more restrictive, um, but we don't know how that's going to change. There's still some opportunities to get programs out there. I think they're just being more scrutinized than in the past, which is normal. I mean,
That's
that's just the nature of where we're at today. In a month could be different.
That is true. That is true. We're charting in uncharted territories. Who would have thought that we'd be sitting here, having this conversation virtually versus face to face versus doing a class? Things are changing, and this could become our new norm.
Yeah, for sure. I mean, it's wild times. You would have told me this a month, 2 months ago, I would have been like, "What are you talking about?" But everybody, I mean, this is how we're connecting. It's good that we can do it. That's cool.
Exactly, exactly. So with the few minutes that we have left, what would you like to tell your viewers? What's most important for them to know right now in these challenging times regarding finances?
Um, Ask a lot of questions, right? I mean, that's that's the key. Talk to somebody who does it all the time. Somebody who's been through the rodeo. If you have paperwork and you're not sure of what you're signing, and have somebody else look at it, right? Just at least a second set of eyes, because it's a scary time right now, and you just want to make a good decision for your family, right? That's just it. Whether it's a forbearance or selling your home. I mean, I talked to a lady today. She's like, I think I need to just sell my house.
Mhm.
Um, Whether it's selling your house or forbearance, refinancing, just looking at all the options
Mhm.
and seeing what's going to be the best thing for your family long term, right? What's that answer? And just takes time to figure it out, but seek counsel. It's the best thing you can do in life. Seek counsel.
Exactly. I 100% agree with you. At the end of the day, our business is a relationship business. We are here genuinely to help our clients. I
Mm-hmm.
always say that I'm not hungry.
Mm-hmm.
I have been blessed to have had a full career in nursing, had the opportunity to retire. My husband did 20 years in the Marines, had the opportunity to retire, and we genuinely care about our clients. And that's why we work with amazing people like you, Joe, because we see that you genuinely care. How long have you been doing in the mortgage industry? How long have you been doing this?
I've been only been doing it a month. No,
Shut
I'm just
up.
I didn't have any of these gray hairs before this COVID. Lighting is killing me, by the way, Teresa, because this way I look less gray. Sorry. 17 years, Teresa, since
Wow.
2003.
Oh my goodness.
Um, and good days, bad days. It's a lot of fun, like you said, right? I think one of the reasons that you and I get along so well is because we have our hearts are in the right places,
Exactly.
right? Like, and that's the thing is when you lead with your heart and
Mhm.
you really genuinely you want to help people and take care of them,
Exactly.
whether or not they work with you or not. Like, there's tons of deals I don't get from people,
Mhm.
but at the end of the day, you just advise people and do the best that you can,
Exactly.
and it all works out. I mean, I'm a big believer in that, and so that's
Exactly.
why you and I, that's why I love talking to you. We always laugh and joke and all of that fun stuff. But at the end of the day,
Yeah,
we help a lot of people. I mean, we're
we
doing a
do
good
help a lot
thing,
of
and
people.
we're educating people and taking time to set something like this up is awesome, because
Yes.
I think it's a lot of information. I don't have all the answers by far, but I know enough to be dangerous both ways, and it's just a matter of just trying to help people, man. Just trying to teach people as much as you can.
Exactly. That's what it's all about, relationships. Because after we close our escrows with our clients, we remain in touch with them. We don't just put them on the shelf and go away and go next. We
Hmm.
remain in touch with them. We're there to help them. We're there to service them. They can call us anytime. And speaking of calling, how can they find Joe Soto?
Oh, The 866 Joe Soto number definitely works. My cell phone is 714-235-6010. Email Joe at Joe Soto Team. Instagram, Facebook. Come to my office. Yelp, Zillow. I don't know. There's
Where
lots
is
of
your
ways.
office?
There's my office is in Cypress. There's lots of ways to find Joe Soto, but I'm all over the place. How do you find Teresa Miller?
Oh my God. You can find me by dialing 310-713-8459. You can find me on Facebook, Instagram, YouTube. My website is the mmteamrealty.net. My email is the mmteamrealty@ca.rr.com. You can find me everywhere. Just Google me
There
and
you
you will
go.
find me.
Yes. Don't Google me because you will find other Joe Sotos.
Oh my God, I found another Joe Soto. I was like, this is not my Joe. Who is this person? Get
Did you
over
find?
here.
Yeah, there's an MMA fighter who's really ruining my SOI, and there's another Joe Soto who does marketing, who does social media stuff actually. But yeah, don't Google me, folks. You will not find the other Joe Soto. I'm a lover, not a fighter.
Joe, you are absolutely crazy. So Facebook, Instagram, Zoom, however you want to locate us, we
Yep.
are around to help you. We're here to answer your questions clearly with no strings attached. We just want to make sure that you're going to be okay. So, with that being said, I'm going to sign off of Facebook Live and I'll see you soon.
All right. Take it easy.
All right. Let